Hello guys, we are back with another video. In this video, we'll be solving question number 14, which is the last sum of this ISC Specimen question paper 2024 for accountancy. If you want to get notified whenever a new video comes in, do hit the subscribe button and the bell icon. Do share this video as well with your friends who can get benefited out of it. Without further ado, let's get started. This sum is the sum of ratio analysis. In the first one, we are asked to calculate the inventory turnover ratio. We have been given the opening inventory, the closing inventory, the revenue from operations, and the gross loss. All right. So let's first write down the inventory turnover ratio formula that we have. So inventory turnover ratio equals to cost of goods sold. Formula is very important. If you remember them, you can do the sums very quickly. All right. Cost of goods sold by average inventory. Okay. It's important to put the values. Average inventory, the formula. Let's write the formula for average inventory as well, which is nothing but opening inventory plus closing inventory by 2, right? So opening inventory plus closing inventory that we have here by 2, the entire thing. Okay, so let's put the value as well. 20,000 plus 2 lakh. Then this entire thing will be divided by 2. So let's put bracket here by 2. 1,10,000 is my opening inventory, is the average inventory. All right, the first part is done. Now, in this case, we have a gross loss. So, cost of goods sold, let's write the formula for cost of goods sold. Cost of goods sold will be equals to revenue from operations. Generally, we subtract gross profit from revenue from operations, but in this case, we have gross loss. So, we have to add that to calculate the cost of goods sold. So in that case, it will be a straightforward 7 lakh plus 70,000. Okay, so 7 lakh 70,000 is our cost of goods sold. So in that case, our average inventory turnover ratio becomes cost of goods sold, which is 7 lakh 70,000. Just now we calculated, divided by average inventory, which is 1 lakh 10,000. So 7 is our answer, which is the answer for inventory turnover ratio, Roman 1, that we have done here. Okay, let's move on to Roman 2. In the second one, we are asked to calculate the gross profit ratio, and we have been given opening inventory, closing inventory, revenue from operations, and inventory turnover ratio. So let's write the formula for gross profit ratio, which is gross profit in this question. We have to calculate gross profit, that's not given, by revenue from operations. Gross profit by revenue from operations, which is given straight away in the question in 200. Okay, so first thing what we have to do, we have inventory turnover ratio, and just now we saw the formula here as well. From the inventory turnover ratio, we can calculate our cost of goods sold, the missing value. Okay, so let's do that. Before that, we would need average inventory to calculate. So let's calculate our average inventory first. So our average inventory will be 80,000 plus 1 lakh divided by 2, which is 1 lakh 80,000 divided by 2, that will come to 90,000. All right. So that becomes our answer, 90,000. That is our average inventory. Have to just change this number here. This becomes average inventory. 90,000 is average inventory. Then after doing this, we now need to calculate the cost of goods sold from this formula. So cost of goods sold will be equals to inventory turnover ratio into average inventory. So let's write that formula down here. Cost of goods sold equals inventory turnover ratio multiplied by average inventory. Okay, let's put the values. So average inventory turnover ratio, we have 8 times. So 8 multiplied by average inventory. Just now we calculated 90,000. So it's 7,20,000. That's our cost of goods sold. So we have cost of goods sold now. We have revenue from operations given to us. From both of this, if you subtract both of this, you get gross profit. So gross profit equals to straight away calculation, revenue from operations minus cost of goods sold, right? Cost of goods sold. Let's do the subtraction. 9 lakhs minus 7 lakh 20,000. So that becomes our answer, 1 lakh 80,000. Okay, that is our gross profit. In that case, now we can easily calculate our gross profit ratio. That will be just, we have to put the values here. Let's do that. So gross profit ratio equals to gross profit, which is 1,80,000, divided by revenue from operations, which is 9 lakh, into 100. So 20% is our gross profit ratio, and you have to add the percentage sign. All right, gross profit ratio is done, so Roman 2 is done as well. Let's move on to the third one that we have, Roman 3. We have to calculate liquid ratio up to two decimal places. We have current assets, inventories, and current ratio given to us. From the current ratio and the current assets, we can calculate the current liability, which is the missing figure here. So let's do that. Current ratio equals to current assets by current liabilities. So current assets by current liabilities. Okay, so if we just turn the formula around, so that will be current liabilities equals to current assets by current ratio. So current assets by current ratio. Let's put the values. So we get current assets are given as 1,26,000. So 1,26,000 divided by 1.5 is to 1, that means 1.5. So 84,000 is our current liabilities. All right. Now, in order to calculate liquid ratio, the formula is quick assets by current liabilities. So quick assets we have to calculate. Quick assets equals current assets minus inventories, right? Inventories. So you put the values here. Current assets are 1,26,000 minus inventories are 2,000. So 1,24,000 are your quick assets. So liquid ratio will be equals to quick assets divided by current liabilities, right? So let's put the values. Quick assets are 1,24,000 divided by current liabilities, which are 84,000. So we get in terms of decimal places 1.48. That's the answer for Roman 3. Let's move on to Roman 4 that we have here, which is the last one. We have for the year 2022-23, the operating profit ratio of Noah Limited was 65%. Its revenue from operations was 2 lakhs. You are required to give the formula used by company to calculate the operating profit ratio. So that is a straightforward formula. Formula for operating profit ratio equals operating profit divided by revenue from operations, right? So we can do that. So operating profit, we can write at one go itself by revenue from operations, okay? And that will be multiplied by 100. This entire thing into 100, okay? We can write this again in the same manner, the usual manner that we write here. So that becomes operating profit by revenue from operations, revenue from operations into 100. Okay, this is the formula. Again, be careful. They're asking for operating profit ratio and not operating ratio. That is one area where you might go wrong if you don't read the question properly. Then the second part says we have been provided with two components for calculating operating profit ratio. Calculate the remaining component. So the other component which is missing is the operating profit. We have the operating profit. We have the operating profit ratio given to us, right? Operating profit ratio is given to us. We have to calculate operating profit. So let's readjust the formula. Operating profit equals to, that will be operating profit ratio into revenue from operations, right? So operating profit ratio into revenue from operations. Okay, let's do it. Let's put the values. Okay, so operating profit ratio is given as 65%. So 65% is 0.65, straight away calculation, into 2 lakh that we have. So 1,30,000 is our operating profit. The missing component is calculated. So this completes our entire paper. Section C, we are not about to solve because that's computer and accounts. That's straightforward. If your school is following that, you should be able to do it. So this completes our specimen paper for accountancy ISC 2024. If you have any questions, do let me know in the comments box below. I'll be answering them. Do share this video with your friends who you think can benefit out of it. Do subscribe to the channel for more videos that will be lined up. Thanks for watching, guys.